Over $460,000 is what you'd have to pay for one share of Berkshire Hathaway. For the price of a house, you might get one share of Berkshire. But what's in it for you? Good question. Through one stock of brk.a, you get indirect ownership of a plethora of brands. Primary ownership in Dairy Queen, Fruit of the Loom, NetJets, Geico, and Duracell, with minority ownership in Apple, Kraft, Heinz, and other stable publicly traded companies. But more on that later in the video. If you don't find a way to make money while you sleep, then you will work until you die. If you have already come across this gem, you probably recognize the man who said it as well. He is none other than one of the wisest and greatest living investors and business tycoons of the present era, Warren Buffett. It was during the early 60s when he valued a then underdog textile firm called Berkshire Hathaway, and on present date, the firm acts as a major investment vehicle for the billionaire. So what exactly was the strategy that led the firm to this huge success? Was it just the weaving magical fingers of Buffett himself? Today, we will explore the story of the 8 largest public firms' success and about the magic this billionaire investor commands. Stay tuned with us as we take you through all of the tits and bits of it all in this video. Welcome to Wealthy Mindset, where we explore unique and breathtaking angles from the world of money, economics, personal finance, and investing. But before we get started, do not forget to like this video and subscribe to the channel to never miss another video. Do you want to begin investing? You should do it as early as possible. This is somewhat what Buffett took perhaps very seriously. Buffett is said to have started investing at the early age of 11, and by the time he was 13, he was already paying taxes. He joined a firm called the Graham and Newman Corporation in the 50s, where he worked for 2 years. His job was as a security analyst. This is where he found the role model there in Benjamin Graham, who was then owner of the firm. After the company was disbanded, Buffett returned to his hometown armed with a load of investment knowledge and expertise acquired from Graham himself. And that's when it all began. The journey of a string of strong business decisions, amazing investment acumen, and the eventual success of the company that we're talking about today. Buffett began an investment partnership firm in the 60s, after returning to Omaha, which shot him to small but instant fame in the world of investment in Wall Street. People began to trust their money with Buffett, as they wanted him to manage it all. In 1960, he put a mini investment in a textile firm, namely Berkshire Hathaway. Now, before diving straight into the rags to riches story of the firm, post-entry of Warren Buffett, let us first know how the company came into being. A textile firm was founded by an American called Oliver Chase in the early 1800s. It was successful due to the constant support offered by Samuel Slater, who happened to be the owner of the first successful textile firm in America. In 1929, the company got merged with Berkshire Cotton Manufacturing Company. Hathaway rode high on success during the first few decades of the operations. But the post-World War era brought with it declining interest of the population in the textile industry. And now let's talk of the beginning of the era when Buffett's magic did the work on the firm. Around 1962, Buffett started purchasing shares of this drowning ship. After 3 years, the ex-captain of the ship wanted to purchase back all the shares of the company bought by Buffett, to which he gladly agreed. But as destiny had it, the tender notice for the purchase of the shares drafted by the ex-captain offered a little less value for each share as decided mutually earlier by both parties. Buffett bought back a majority of the company's shares and eventually took complete control of the firm and fired the con, who tried to cheat him for a measly sum of money. Aboard the sinking ship again, as captain this time, he tried to keep the core business of the company alive, but eventually he ventured with the firm into insurance industry, buying the National Indemnity Company in 1967. And after it, the firm bought an equity stake in Geico, which acts as a major source of the company's capital to date. It was in 1985 that textile operations of the company finally closed down, with the last manufacturing unit being shut. This was when Berkshire was acquiring companies and looking more like an investment conglomerate that we recognize today. This was the story of revenge and intelligent investing. Wasn't it much like the Wild West movie plot? So what does Berkshire exactly do today? Well, Berkshire Hathaway has now extended its business ventures into utilities, energy, recreational vehicles, flight services, media, clothing, building products, and general retail, including the insurance industry. The firm also holds a record of having the highest price of shares, with the highest price of its Class A shares to be around $465,515 as of the 24th of February. In 2019, the company's annual revenue stood at $255 million. Buffett admits that purchasing Berkshire Hathaway had been the biggest investment mistake he had ever made because he believed that, had he invested the money directly into the insurance industry, his returns would have been several hundredfolds. There have been several excellent business decisions made on the behalf of the company, such as owning 5.5% equity of Apple, acquiring Duracell from Procter & Gamble, and many more. So what all does Berkshire own? As mentioned earlier, the firm's 65% equity securities are invested in the American Express Company, Apple Inc., Wells & Fargo, the Coca-Cola Company, and Kraft Heinz. The company today wholly owns Geico, Duracell, Dairy Queen, BNSF, Lubrizol, Fruit of the Loom, Helzberg Diamonds, Long & Foster, Flight Safety International, Shaw Industries, Pampered Chef, Forest River, NetJets, and many more. The list is simply nothing less than astonishing. So what do you think? Was Buffett's investment in Berkshire Hathaway a rogue decision, gone fruitful? Or was it all due to the intelligent decisions made by Buffett and successively by the effective management board of the firm itself? Let us know your thoughts in the comment section below. Like what you saw and learned? Subscribe to Wealthy Mindset if you want to keep watching videos on exciting and unexplored topics just like this one. We hope you enjoyed the video, and we'll see you next time.